Hello viewers, welcome to Forex Flow weekly analysis for the week starting on January 13th till 17th. If you stay with me for another 10 minutes, we'll be looking at the forecast for the coming week. If you're new to my channel, be sure to subscribe it and leave your feedback in the comment section. Here on the screen, you see EURUSD. This pair has been going up since last month when the interest rates were cut down by 0.25%, and we have seen this uptrend. And this was the previous support. As we know, 110 was a major support in the past, and this pair has been going up slowly, gradually. There's not much activity here. I think it's good for day traders, but for long-term traders it requires a lot of patience, and they have to hold their position for it to go up. Also, you cannot put tight stop loss. If you put tight stop loss, then it can easily be triggered and you can lose your trade. But here we have seen that it reached to this 112 level, which was a strong resistance in the past, and I have put these support and resistance rectangles here for you to look at. And if you remember, on the weekly we have seen this pair has been going down like this, and this was the bottom here around 109, 109.50, and then we have seen this spike, then it went down, and now it's going up again. But it is staying within this area, which is heavily resisted here with this 50-day moving average on the weekly chart. As you can see, all these spikes and inverted hammer and huge red candle here on the weekly chart, which is a signal that the price is heading downward, and there's a lot of selling pressure around 112 area or 111.50. So what's there for us in the coming week? As you know, this selling was done this week, a strong selling from 112 all the way down to 111, and then we have seen this little bit profit taking happen here on Friday, and this pair has gone up. Now for the coming week, if it goes a little bit up further to 111.50 around that area, or 111.40, 111.50, and if you see a sign of rejection, the price is heading downward, then that would be the next leg down. Our expectation is that the price would go down here to 110.50 with extension to 110. So here currently it's getting this support from this 50-day moving average, which is right sitting below here around 111. And if it breaks below that, then certainly it's heading downward to 110.50 with extension to 110. So in the coming week, we can see the price may go up and down like this, and then it go up. If it gets rejected here, then it can go downward. And that would be one scenario. The other would be it can continue to go down from here like this. So in either case, our initial target would be around 110.50 with extension to 110. This is not in a buy position right now, so I would say if you enter into a sell trade around 112, 111.50, then you can close your position here or lock your profit and wait for the price to go down. As you can see here on the weekly chart, this pair is clearly heading downward. We may see the price rising up here all the way here to 110.50, but if it gets rejected, then on the weekly chart we'll certainly see the price is heading downward. Also on this 20-day moving average, you can see there is a little support around this area, which is at 110.50, so that's where we'll be looking forward to take profit initially. If it breaks below that, then we'll extend the profit all the way to 110. That's for EURUSD. Now we're looking at USDCAD. Here you can see the price has been going down, and this pair is heavily associated with the oil price, and we have seen with the oil prices going up above 60, this pair is heading downward as Canadian dollar was becoming stronger. And but there was a strong support here around 129.50 from the past, and I put this rectangle here. If you look on the weekly chart, you will see that the price has gone down a few times here and then bounced back up. If you look at here on this line chart, you will see that the price came down here, it bounced up, then it came down here, bounced up, and again it got support here around 130 area. So what's there for the coming week? We'll be looking at the weekly chart. Here we have seen the price has bounced up, but it has given a lot of gains. It reached 131 this week, but it has given a lot of gains, almost 50 pips, and now it's currently sitting in this area. So this could be a result of profit taking. Also, as you can see, these moving averages are coming down and there is a selling pressure from above. So every time price is trying to reach to 131 or trying to break above that, there would be huge selling pressure. But we have plenty of support here, In the coming weeks, if you see the oil is rising up, if it goes back up to 65 again or above that, then certainly this pair will be heading downward, and there will be initial target would be around 129 with extension to 127.50 in the long run. If you see the oil is heading downward, then this may go up, but initially it will get a lot of selling pressure around this area. This is resistance. If it breaks above this 50-day moving average, then we'll look at the next scenario. If the price is heading back upward to 132.50 with extension to 133, in the coming week we'll see the price will act accordingly. That's for USD-CAD. Now we're looking at pound USD. Here we have seen the price broke above 132. That was a lot of profit taken after this huge selling that happened from 134 after UK elections, and it reached down here. So this rectangle has been sitting there for a very long time. As you can see, this was initially the very strong support, and this was also the area where we were saying that this 50-day moving average is very close to this support area, so there will be huge buying pressure here, and that's what we have seen. The price went up, and then now it's again heading downward. So by looking at this 50-day moving average acting as support, the next target would be around 129. If it continues to go downward and you had entered into a sell trade, you can certainly lock your profit around 131 and let the price go downward. If it goes up and you see another selling opportunity like this, a big red candle or inverted hammer like this, then you can easily take a sell position, and this time the price should be heading downward. If you look on the weekly chart, this is still in the RSI is very high right now. It's above 50, and we have seen these two weekly candles which are rejection, the price rejection. Every time it's trying to go up, there is huge selling pressure from above. So in the coming week, based on these two inverted hammers, there is a chance that price will be heading downward. If you see any sign of rejection and that the price is not able to move upward, then you can take a sell position, and this pair should be going downward. Initial target would be around 129.50 with extension to 129. That's for pound USD. Now we're looking at Swiss franc. Here we have seen the price is struggling to go up, but every time it goes up, there is huge selling pressure, and the price is not able to make a good move here. And today we have seen a lot of selling here that happened. This was the opportunity to enter into a sell trade. The price just touched this 20-day moving average and it got rejected. So on Friday, usually this could be an opportunity for profit taking as well. As we know, this pair is trying to struggle between these two orange lines around 9.9650 and 0.98. This is the range currently. The price will be moving up and down in this range. And here we can say that based on this candle last 2 days, the price may be heading downward. If you had taken a sell position here, I would say lock your profit or set appropriate stop loss. But if you look at the line chart here, this will tell you that the price is ready to go down. It may go up a little bit again, get rejected from this 20-day moving average, and then it can head downward. The other scenario is if it goes up all the way to 0.98, gets rejected with this 50-day moving average coming downward, and you see a lot of selling pressure around that area, then that would be another opportunity to enter into a sell trade, and we'll see the price heading downward. If it doesn't move too much, I would say stay away from this pair, because right now it may be good for the day traders to make 20-30 pips. It's really not good for the long-term traders or weekly traders. Now we're looking at gold. Here we see that the price has been going up. We know that gold is a safe haven for all these currencies. Whenever there is uncertainty in the economy or overall situation in the world, there is a lot of interest in buying gold, and that's what we have seen here. The price has gone up. It got rejected with this level. The price broke above that. I think this was the day when there was high uncertainty about the situation in the Middle East. So it went up, but everything had cooled down, so price went down. A lot of selling happened here, maybe profit taken as well. And with the situation getting better, the price is now heading downward. Now this is in a position where we have seen there is still buying pressure here. We have seen this on Friday. So this may go up in the coming week, but here is the marker for you. This orange line, the previous high of this green candle, which is sitting at 1590. If you see the price is rejected from there, you can easily enter into a sell trade. The price should be heading downward. Then by that time, this pair would have made a M pattern. So it would be going up like this, and then from there, if it's rejected, it can go down like this. So this is one scenario based on if the price goes up in the coming week and gets rejected around 1590 or 1580 area. Initially, our target would be 1525 with extension to 1500. As we know, 1500 has been a strong support in the past, and that will continue to act. Also, this moving average is sitting there, so definitely you want to lock your profit or close your position, sell positions around this area. I would not recommend entering into a buy trade here. Already the RSI is very high. There may be some spike in the price here, but we have to be looking at it very closely. If the price is rejected around this previous high, then you can take a sell position and not enter into a buy position at that point if the RSI is very high. So wait for the price to go up and RSI to be above 80, and then you can look for the opportunity to take a sell position. This is a good trade setup, but you have to be patient to enter into a trade at the right time. Now we're looking at crude oil. Here we have seen a similar situation where the price was going up and then it went above 60. It reached here at the top at the time when there was a lot of uncertainty about Middle East situation. And then we have seen the price has been going down after that. Based on this, we can say that the price will be heading down. If the situation gets further better and there is huge supply coming in, although OPEC announced some cuts, but if there's sufficient supply, then this pair will be heading downward and it will go back to 55 in the coming weeks. It may dip down here around this 50-day moving average, and you may see a lot of buying pressure because this area around here, let me put a rectangle here. Around this area, it had struggled a lot in the past to go up, and there is a lot of contracts were done around this area. If the price breaks below and it gets support here around 58 or 57.50, if you had entered into a sell trade, you should be closing your trades around that area. If it breaks below that, then certainly you can extend your profits. Otherwise, I would recommend you to lock your profit and wait for the price action. It may get a bounce from here and it can go up a little bit. It all depends on the situation. It's very tricky in the coming weeks. So based on that, I would say play with a small position and do not enter into a buy or sell without closely watching the markets. With that, I'm going to close. Thank you very much for watching. If you're new to my channel, do subscribe to it and leave your feedback in the comments section.